On Hot Picks today, we are checking out the auto sector. Our guest has Ferrari as his top pick. He expects that company's first all-electric vehicle will bring in new buyers in key markets such as California, the Nordic countries, and China. We're joined by Tom Narayan, lead global autos equity analyst at RBC Capital Markets. Tom, great to see you as ever. Thanks for joining us. Start off with Ferrari. Remind us why you think things are looking up for this car company.
Yeah, I mean, it's very difficult usually to get people really interested in buying the stock because it's usually always so expensive. But they have an interesting opportunity, investors do, because the stock has pulled back 20% after its October investor day. And there's some people worried about its EV. We are not. They have this really interesting car, the F80. There are 800 of them they're going to sell. They're $4 million cars. When you do the math on that, it's incredible, super profitable. So the setup is really great, given this 20% pullback in the stock. Finally, investors who want to buy this stock, I think it's a great time for them to participate. And they get to benefit from this F80 car, which starts deliveries in Q4 of this year.
What's that car? Sorry, Tom.
Yeah, it's basically...
Go ahead.
It's basically a supercar that's they're going to make 800 of those in its lifetime. They're going to sell them over just 3-year period, and they cost $4 million a car. So the profits on those are incredible, right? Unless you're putting $1 million of costs or something, which is, I mean, a car is a car at the end of the day. So super profitable. Huge boost to numbers in 2025 and in 2026, and then really 2027. I think some folks who got a little spooked at the October 9th investor day. I think there's a lot of new people in the stock who kind of pulled out, and now I think the core holders, the people who want to own Ferrari, are kind of waiting on the sidelines a little bit. But now I do think folks will start buying the stock.
Let's get a little more mundane here. General Motors, you see upside here, Tom. Why is that?
Yeah, I mean, this one has been a great performer. It's hard to also pitch this one now, given how strong it's performed. But I still think there's more upside here. Tariffs has been a great story, the resolution of them. They really benefit GM. USMCA is going to be negotiated, I think, June or July in 2026. It's a big catalyst for them. Also, they do have some tariffs that come from their Korean imports. So we'll see probably some resolution there. And then outside of that, this is just as steady as she goes, 65, 70% of the large SUV market, and probably the best auto market in the world, the United States. They don't have to worry about China coming in the U.S. because of tariffs and because Americans aren't really buying EVs. It's a great relative play, and it has been working. So yeah, if it ain't broke, let's keep going.
And what about pushback in America to the high sticker prices on cars? Presumably that'll curb sales growth. People are just tired of these massive prices.
Yeah, no, you're right. But that's been the case for a while now. Yeah. Since the pandemic, we've seen a huge bout of inflation in car prices. But at the same time, unemployment is really low. The economy is actually pretty healthy in the States, except for maybe the kind of lower end. People if you need a car, you have to buy a car. That's it. How do you else get to work? It's not a discretionary purchase, really. And, we calculate like a 6 to 7 million vehicle deficit, cars that were never purchased since the pandemic. Partly it's because of the high prices, but also it's just, people weren't buying cars and they still need it. The cars are getting old and they have to replace the car to get to work. So, so we still think there's going to be some support, even despite the high pricing.
Tom, finally, Aptiv. Remind us what they do and why do you see upside?
Yeah, this is a really interesting auto supplier. They do some of the assisted driving technology, cameras and some of the software there. And then they also do some hardware stuff, right? So they do wire harnesses and some of the electrical components. Why we like this stock, partly it's what we just talked about. There's a lot of strong demand in autos in the US, particularly their kind of core market. But also, there's something cool that's happening. They're spinning out that wire harness business, and we think potentially it could get acquired. So, if you're buying the stock now, you get to benefit from a takeout price of that asset or even the spin out. And then, it's kind of the sum of the parts. You get to value all these different piece parts and also benefit from tariff recovery, relief next year, as well as the secular driver, which is this assisted driving ADAS functionalities.
Yeah, it's fascinating. Assisted driving and automatic driving, Tom, are we going to see incredible progress in the next few years, do you think?
Yeah, I mean, people have been waiting on this forever, including myself. It's been kind of slow going, right? Like people either want the car to drive them completely or not at all, right? So it has been difficult to kind of get consumers on board, but we are seeing this in China. I was just actually there last week, and people love that product, assisted driving. And of course, these guys, Aptiv sells these products in Europe, China, and the US. And we do think ultimately American buyers will want these products. And, eventually we'll get to a point, maybe it's level 3, where your eyes are off the road and your hands are kind of not on the steering wheel, but you're sitting in the driver's seat. That could be the kind of evolutionary phase that we go to next. And a company like Aptiv is definitely a beneficiary there.
Tom, thank you very much indeed for joining us. Tom Narayan, lead global autos equity analyst at RBC Capital Markets.